Hey, welcome to the Closing Beat, everybody. Happy Wednesday to you. Huh? Happy Wednesday. Hey, we're financial advisors here at Jazz Wealth. Thank you for joining us, watching this show, and learning a little bit with us. I promise you, you're going to learn something here today. Also, for fun, we just learned that one of the commercials that we were airing at the Drum Corps events on the big Jumbotrons is apparently offensive. So we're going to air it all next week here on the Closing Beat, so you can tell us if you think it's offensive or if you can even guess why it should be offensive. So, man, people out there. Anyways, we're here to talk about the stock markets, not everything else. I do want to let you know that if you're a client, our Wine and Wealth last week was a good one, our July financial focus, and actually you can go through the months and look back at the June financial focus and so on and so on. Help you get your dough straight there. There are literally hundreds of Wine and Wealth videos over the years with lots of cool stuff that we can't always talk about here publicly. And so I hope you'll check that out. Also, next week, and probably starting next week, we'll have a little display, show you where we're going to be in Indianapolis, downtown, and the times that you can come meet up with us if you'd like. We're going to do a series of meetups up there. Look forward to seeing you. Hope you'll want to come check us out. All right. There was a lot going on today. I mean, you look at everything that happened since overnight with the assassination of the Hamas leader and the price of oil going crazy and bonds kind of adjusting, and then the Fed rate decision, and then earnings coming out, and then the econ news and the inflation news. It's like, well, how are we going to package this all up into one thing and try to teach you something? So that's what we're going to do today. Let's start with the S&P. Actually, I'm going to go back. I'm sorry, I lied to you. The Fed announcement, that's probably the most interesting to you. They left rates unchanged. So those of you that voted yesterday for that, actually our poll today, if you want to have a poll up there, you want to do it? Okay, hold on one second. So the Fed changes some of their words and their phrasing, literally changing the word to some from moderate, and we're going to look at both sides of our risk tolerance and stuff. Not a lot, but it really did kind of confirm that, yes, September, given everything staying the same, that's going to be our first place that we look for a rate cut without them actually saying it. I don't know why they can't actually just say it, but they chose not to say it today. So now the September rate cut probabilities, though, went from 90% a week ago to 85%. Remember what we talked about yesterday, so that's what happened there. Also, did you see it? You had that back and forth that we talked about where the Fed announcement comes out at 2 o'clock. We go one way, we went back up, or no, we went up, we went down, and then we took off back up again. That happens every single time. Now, the market, well, the S&P, and I didn't even mention, the AMD upgrade that caused NVIDIA to take off and all this stuff. So a lot going on there, but the market, S&P wise, what did it do? We talked about this yesterday. It's so cool to see something ahead of time, watch it happen, and then see the opposite happen, or see what you expected to happen. We came down to the top of this trend line. We said, well, why would anything happen until we break through it or start to move away from it? We need a catalyst, right? Well, yesterday it was okay. We talked about the inside day yesterday. And then today we have the catalyst, right? We have a lot of them actually to help the market actually start moving off of this, what we can now call a support line there. And so, yes, people want to buy in this area. The technical traders won this match there. And we finish out July on a strong note, which I've got a fun fact for you. I don't know if you guys like this stuff, but July, as of yesterday, we were down about a half a percentage point in the S&P. If we had finished negative today, or the market would have gained only 0.49%, that would have been the first July that has been a losing July in 8 years. We have an 8-year streak going. Well, now, we obviously much bigger rally there. We now have a 9-year streak of July's being positive there. Remember, in the S&P, historically, July is the best performing month. That's not the same for the Dow. I often show the Dow there, but historically, it's the best performing month. And we say, okay, 9 Julys in a row of being positive. Is that odd? Kinda, right? 10 is the longest streak ever. So it ended in 1959. We had 10 streaks of Julys being positive. I know, I got a little carried away here. And so the poll that we're going to go with here today, which month in the S&P holds the record for being positive 12 years in a row? Out of all the months, which month is positive 12 years in a row? And I'll give you a little hint. This happened from 1943 to 1954. There were 12 consecutive years where one particular month, was it, did you already put a month? Was it April? Was it July? Or was it December? You guys tell me what you think there. There was another streak that ended that was also the same month, so I won't give away the answer. And that ended in 1997. There were 12 consecutive of these particular months that ended with a positive gain there. Anyways, a little fun that we can have, right? All right, so looking at the S&P, that you would think like, oh my God, that's impressive. Oh, wow, look what's going on there. The NASDAQ, same thing. I didn't draw the line for you, but we're back on the bottom of this downtrend here. You got your reversal catalyst in there. I do want to point out the Dow, right? Wasn't the most exciting index today. And that was largely because of how like Microsoft started and some of the others that had a weak earnings report, but not too bad there. And then the Russell 2000, it's overbought. Right? So it did. Look at what happened. Look at right at the Fed meeting there. It blasted off. But we're not 100% sold on a September rate cut. The comments that changed made it feel that way. But everybody, you notice the Fed rate odds there? They all of a sudden started coming back down. And as soon as they started coming back down, the Russell started coming back down. So remember that the interest rate decision is not just based on the bond market. It's really, really going to hurt the Russell 2000 if we don't get a rate cut in September, because everybody's already priced in 1.5 rate cuts through the rest of the year. I think one is already kind of stretching it at this point. Nonetheless, the Russell takes off and goes, wait a minute, we're overbought. This is too expensive. I'm not paying that high of a price. I just will wait. And all of a sudden, the Russell comes flying back down. So I thought that was pretty interesting to watch. I hope you didn't fall for it. If you've been watching, you know, patience. Gold breaking a new highs there. Remember, gold moves in fits and starts. We've had this little fit back and forth here. Could this be the new beginning of everything? Check the dollar, play that game if you like playing that game. And the bond market, of course. Hey, all right. We're looking at a lower rate environment. We don't have them yet, but the Fed is moving closer and closer to lowering rates, or starting what's called a lower rate cycle, or a rate cut cycle is probably what you'll see them say. Nonetheless, because of that, the prices of bonds move up. The yields move lower. So interest rates, at least in the past few months now, are the lowest that they've been. That's not saying a lot. I get that, right? I'm not trying to tease you, but yeah, they are. If you look at the short-term rates, same thing. You got to go back to March to find a moment in time where rates were lower than they currently are. Again, not saying much. I get that we still have higher rates. It is what it is. Hey, here's a fun one. Crude oil. There you go. I mean, not fun one, right? The guy gets, I don't know if you care or not, but they shoot a missile at this guy inside of his house and then kills his bodyguard, kills the Hamas leader. It's like, that was Israel, by the way. And you're like, oh, okay, are we doing this? Are we going to go down that road again? Yes, it looks like we are. But nonetheless, the price of oil moves higher because, hey, it happened in Iran. I went to say it that way, in Tehran. So you have this issue where oil, it's a normal inventory number day. That started moving things, but oil was kind of already doing its thing. You have a geopolitical event, right? That's what the bond market responds to, gold responds to, the dollar responds to, and oil responds to, not to mention others. And so, yeah, you're going to get that happening there. I do not suspect that this is just going to blast off again tomorrow. There's really nothing left to make it do that. So if oil is quiet tomorrow and trades inside of a little tiny range, that's totally normal, nothing there. We mentioned a second ago, rate cuts. This will be the lesson of the day here. So when the Fed goes through a period of raising rates, if you've been watching the show, we talked about how the markets perform. Would you know that it was almost exactly perfect to the average? At least to this point. Now we're getting to the end of they're done with their rate hike cycle, right? So now we're going into a potential rate cutting cycle. Well, how does the stock market perform during a rate cutting cycle? It's not as easy as just taking everything, putting it together and showing it, because there's different events that could happen. So we broke it down this way, and here we go. On the screen, don't let it scare you. It's a cool little chart. First, just notice what we're doing here. We're saying our baseline is when they start the actual first cut. So we can look backwards and see how the market performed in the 12 months leading up to that. The blue line is the average. And we say, okay, right here, oh, my mouse is here today. Right here is where the first cut happens, and let's look 2 years forward regardless of how many cuts there were. As long as there was a cut and we were in the middle of that, fine. If there was a rate hike, which there was none in this case, then we would say, okay, that doesn't count. So we only have rate cutting scenarios. So the average performance, right, we're starting from 100, the average performance is about a 26% return over the 2 years. It's not perfect, and it doesn't just go in a straight line, although it looks like it does, but that's the average performance. Then what we did is we said, well, boy, there were some really nasty times in there. There were recessions, and then there were full-on collapses, right? So let's break it apart. So now we look at the red line and we say, what is the average if there is no recession during that period? In other words, we take out any of those if there was a recession. Naturally, that's going to be a little bit better performer, but you can see it's still positive. A rate cutting cycle does produce positive stock market returns, although, not day to day, so let's not get carried away here. The only weakness is if it was after 1990 and they were cutting rates, and then we had a recession. We actually had a handful of them inside of that window. That's where the average returns 2 years going forward, we're not able to get back to positive territory. So the moral of the story is, if you're looking inside of this, that, well, if the markets pull back towards September and then the Fed starts cutting rates, isn't it kind of a viable pullback? Which is what I think a lot of people think anyways. So really kind of cool to break it down that way, and hopefully you learned something. Let's go over to some earnings real quick. I won't spend a lot of, you all right? You good? You good? Doing great. Okay. Just making sure. Everybody's here today, and it's starting to get hot because we have the air off. Oh, you want to do Guess the Dow?
We can do Guess the Dow. Yeah. For anybody that didn't tune in yesterday, we have the same leaderboard as yesterday. We have Jenka, Peter, Mark, Lisa, and Gabriel. Not a big move today.
So no movement, because the Dow wasn't like the S&P or the NASDAQ or even the Russell for that matter. So again, we're playing Guess the Dow, and hey, no movement on the board, so we will move on there. Good luck to everybody, right? All right, we'll do some stocks in the news, and I'll take your questions, and we'll get on out of here and do our thing. Starbucks is first up here. Remember, we were teasing them throughout the week here about their comments about their brand. Anyways, Starbucks comes out with earnings. China sales down 14%, U.S. sales down 6%, and that's for the second quarter in a row. But we don't get it. Why don't people understand the power of our brand? What's a $7 coffee? And they alluded to it this time. So a little bit of kudos for them. If you look at I wanted to show some data here with you. If you look, they have to do something. They have years of positive, or at least growth, in the total transactions that they do, and growth to at least some degree in the average ticket price. Well, the last 2 quarters, what do we have? Well, people don't want to pay that much for coffee. You're going to have to come up with some other incentives and the little app and your rewards program and all that. They alluded to doing that. Well, we have negative growth in our transactions. We only have the slightest amount of growth in our average ticket size, but it's actually down compared to last quarter. So they have to address that. They got smart this time, and they said, yes, we understand the friction that we've caused with higher prices. So, I'm gonna give them a little pass on that one. Yeah, not too bad. Hey, Boeing replaces their CEO. They had earnings as well. Free cash flow is a big focus for Boeing. If you ever look at their earnings there, that's what everybody likes to focus on because it's an unbelievable amount of money. And so the free cash flows came in line. The only thing I didn't like, if you could put a negative on this little thing, their debt. Let me ask you this. If from last quarter, you in your family's household, your debt went up 21%, would you make some decisions? You probably, right? I mean, maybe you bought something and you had no debt and now you have 21%. Okay, well, that's not horrible, I guess. But yeah, their debt's up 21%, and they got a lot more money than me and you. So that part was the only one that really got me there. I'm not sure I'm sold on that yet. Humana. All right, so we covered, I know it's not the most exciting thing, but the healthcare people, right? We talked about this with United Healthcare, their medical loss ratio. It's essentially a really fancy way of looking at their top line profit margin. I don't like sounding complicated here. Medical loss ratio is, hey, they collected so much in premiums and people got sick, so they had to pay out some percentage of that. That percentage was 89%. So for every dollar they collected, they had to pay 89 cents out in expense, sickness, right? Covering what you signed up to do, is have insurance, right? Anyways, they cut their guidance going forward, and that's going to be the reason for your drop here, because more and more of the medical payments that they made were for new hospital admissions. So and that's where, that starts to add up there, right? So they had more people staying at the hospital than expected, although their medical expense ratio was in line, or their loss ratio was in line. Going forward, they said, you guys with your sicknesses out there, you know what I mean? Stop it, you're killing us over here. Mondelez, they make Oreos. Well, they make a lot of stuff, but Oreos are my favorite thing they make. And then secondary, I'm gonna go Chips Ahoy for the other one there. They make Chips Ahoy. And Cadbury eggs and all, they make stuff. Snacks in packages that you probably shouldn't eat, but we do. Anyways, great example. We've seen this, right? They sold less stuff, packages of Oreos and stuff, although I've been helping them out. They sold less of them, so volume was lower, but we paid more for the product, right? So what is he doing? Is he currently using the bathroom or? Oh, anyway, so Mondelez gets a reward because they obviously sold less stuff, but you were willing to pay more for it. And so they made about the same amount of money. It's kind of a win-win. If you could have less, deliveries and, we don't have to make as much, but we're going to make the same amount of money, I think you'd probably choose that. And that's why I got rewarded here today. All right, we'll take your questions. I'll review the poll here in just a second, but tomorrow we're going to have Regeneron Pharmaceuticals. That's probably going to be a wild one, to be honest. Wayfair, and then you've got into after hours, the real fireworks start with Apple, Amazon, Booking Holdings, Intel, which kind of gave you a heads up today. They're going to reduce costs to try to cut some of their spending so they can try to compete with everybody else there. Mercado Libre, Square, and United States Steel will be reporting tomorrow. So it'll be an active day of earnings, and we'll see. For polling wise, what do I do? Which month holds the record for being positive 12 years in a row? 23% say April, 29% say July, and about half of you were correct. December is the month where for 12 straight years in a row, the streak ended in 1954, and then again there was another streak that ended in 1997, if you want to look it up, where it was positive 12 in a row. Thank you for the compliments on my haircut. I feel younger. Thank you. I needed it, right? Love that smooth jazz. Yeah, I love that smooth jazz too. The creepy guy behind you. Don't look. Blink twice if you need help, Swamp Rat says.
My guy.
He's there for you. Hey, would you comment please on what happens to money market rates? Will they begin to go down? If so, how long and how fast? Love your channel. RJB, thanks for sharing. Actually, we get that question a lot. Let's go on over to, this is not the best example, but I'm going to just use it for price action, right? Money market rates have fluctuated because the underlying notes, bonds, and securities have fluctuated just like this. See right here? Since about May. They haven't really gone up until now. They haven't really gone down. They've been moving inside of this range. So if you look at your 7-day payout of your money, or what they call it, 7-day yield, that's how money markets are calculated, you might notice that from one 7-day period to the next, it might have been 4%. And then the next 7 days that go forward, maybe it was 4.1%. And then it was 3.85%. Well, the reason that's happening is overall, in the entire bond market, we have this fluctuation, right? Your short-term treasuries, your long-term bonds. I'm using a long-term bond to show you this at the moment, just to pick something. And so, yeah, money market rates have fluctuated, although, remember, they quote you the year's yield. A little tricky, right? So they say if nothing changes and over the last year, this is where we're at. But every 7 days, it's recapped because the short-term notes come out of the money market, new notes go in. And so there's a slight adjustment there. It shouldn't be much, but if you notice, hey, like I got some interest one month and then the next month it was a little bit higher. How could that be? I thought I was just going to get 5% or whatever. That's why. And a little volatility in the bond market there. December guesses look great. I love it. Hey, John says, would you dollar cost average or lump sum in this market? Dollar cost average, and I would do it sector by sector. I would not dollar cost average into the index because right now everything's doing this. Less than it was, but you got to spread it out everywhere. So I would go for the discounted sectors and then build into an index position if that's what your goal is, instead of just lumping into everything there. Bert says, did I get a gift card? Did Bert win Guess the Dow, or does he think he wins?
I think he's talking about for the poll.
No, for the poll. Come on.
Yeah.
The poll. Give you a gift card. You come on by. I'll give you a high five, man. A high 4, actually. It's easier seeing your charts in TOS instead of TradingView. Don't know why, but it works. Thank you. I'm happy to have it back as well. I couldn't remember the password, to be honest. Finally had to figure it out. When they merged with Schwab, the password goes to the different account. So this is just a play one. Pedro says, so are we expecting mild correction in September reaction to the first rate cut? Are we expecting, going into September? I was just saying that would be ideal if you could have a buyable event into a known market supporting event. I don't know that it's going to happen. I hope it does. I would have thought it was up until everybody jumped back in NVIDIA today. Sheesh. Bert's going to take an old fashioned. You know, buddy, I would do that for you. I don't have everything now. You tell me when you're coming. I will never turn down just hanging out with a little old fashioned. You know what I mean? And we've got, what we have? We got Horse Soldier, Watershed. We got some stuff, man. Come on by. All right, let's wrap it up there. Hope you enjoyed everything you learned here today. There will, of course, be more. Appreciate you supporting us and all that good stuff. You're going to be in Indianapolis. Feel free to, you all right? He's good.
Great.
Feel free to stop by. We'll have more information on that next week. And next week, apparently, we're going to air what it was an offensive commercial. I don't know. When you wish upon a star, makes no difference who